Friday to you, and happy Friday to you, Alan Nuckman of Agora Financial. Thanks for joining as always. You know, and Alan, right now we do have stocks near session lows. The S&P 500 on the open put in an all-time high. This is futures rolled over, and now we're down about 0.8%. Talk to us about quadruple witching and volume and what you see going on here on this important day.
Well, stocks have been selling from the start, so it's been essentially a straight down move today. But again, like you said, new all-time highs, positive on a week. And what's very important is that it's not just the S&P; it's all the stock indexes have been moving higher. Typically, quadruple witching is really uneventful as traders and institutions have figured out the mechanics of the options expiration and the futures rollover, and it really doesn't usually add much volatility. But today's a little bit different. With Tesla being added to the S&P, yes, we've known for a couple of weeks, but all of these index managers have to get shares, and they have to unload shares to readjust their S&P indexes that track the markets. And Tesla is so big with its market cap; it's the sixth largest company. You know that it's a bit of a challenge. It's a big elephant to stuff in the sausage casing.
Well, interesting way to put it, Alan, and taking a look at the volume there for the S&P 500 using the AVAT or the average volume at time, it's pretty amazing. 300% above the 20-day average on the open as that expiration was happening. You know, let's talk about one way to play this, a little bit of safety, I suppose, with Barrick Gold.
Yeah, I'm looking, if you want to talk volatility is actually compressed. And a funny fact here is that the VIX is 70% off its explosion highs that we saw above 80, and the S&P is 70% above its March lows. So there's a direct correlation, not much volatility. We're trading between 25 and 20 the last 6 weeks in the VIX, so still kind of sideways. But if and when there is some volatility, sometimes, not recently, but sometimes gold is a benefactor of that. What I'm looking at is a reward to risk play here because a lot of stocks have gone straight up. Gold, I think, offers some opportunity. It's at the lower end of its range between the 1850 range and 2050. So the play I'm looking at is GOLD, actually is for Barrick Gold. Barrick's been trading between 20 and 30 now for most of the year. So a $20 call for March is trading at about 350, 375, and the break even on it's only 50 cents higher with 3 months of time. So that's what I'm looking for to benefit from all assets and gold finally playing catch-up to the rest of the market after the shakeout that we've seen.
Alan Nuckman of Agora Financial, thanks so much for joining us for Options Insight. Great to have you with us as always.